Hello, what's up, everybody? Um, just kind of wanted to go over FOMC um, markup and trades that I took today. This is initially what I posted on my Instagram, which was marking up the London highs. You guys know that I mark up my point of interest areas with a little I signal, and this was just a previous low, which I'll go over here in a little bit. But this is what I had marked up. I noticed that we initially took some lows here. We didn't quite get to where I wanted it to go down to, but we did take some lows all across this area. So I was expecting for this price to kind of come and tap into this gap and then fly up to this side and take the highs, but that didn't happen. And we're going to go back over to the chart and see what we have. So this is what the chart looked like this morning when I was taking a look at it. So this is what I originally marked up was, let me go back to the 15 minutes so you guys can take a look at it. And I do use a method called top-down analysis, which is generally just means, you're going over the highest time frame from the daily to the 1 hour. I go to the 15, 5 minute, and then I use the 1 minute for my entries. But I had marked up my London highs here and marked up my lows here. I initially had this area marked up here, so I had it something like this. Something like that. So I had this marked up right here, just to kind of see, what we have already taken out and kind of like follow price a little bit. So we did take all that out. We took these out right here as well. So let's go down to the 5 minute and kind of dissect it a little bit more. And this is what I was looking at as soon as this morning's open was 8:25, 8:30 was right here. So if we look at the 1 minute time frame, I saw that this low, all this liquidity was taken out right here. And immediately knew that that was what a lot of people call, I guess, a liquidity grab is how I learned it. So we grab these lows, there's stops pending before right under here. So if you're a buyer right here and you see this as support, there's going to be stops right under here. And that's kind of what I aim for. I see it getting taken out right here, so remove that. And then I see it climb a little bit higher. We took this high right here. So what I was expecting was something bullish to do something like this, tap into this gap right here, and then fly higher, continuing up all the way up until here. That was my initial idea for this morning. And I did take a loss, which I'm going to play here for you guys. So I was also waiting for New York, I guess, 9:30 our time, 8:30 here in Houston, Texas. So we're right there. We're looking at this area right here, which would be 9:30. So I was waiting to see what it was going to do there because I had already taken some kind of loss here. So let's go ahead and play it right there. I took a buy right here because, like I said, I thought this was just trying to grab a little bit more liquidity here. Right there, waiting to see if this low got taken out to potentially go and continue higher. And that's where I took my loss. I had my buy around this zone right here and immediately took me to my stop loss. So this was equities open right here. And I did see that we tapped into this zone right here. So if we go back to the 15 minute, we noticed that this low has been taken out. So the way I see the market is we're almost, in a sense, is the way I learned it is we're playing tag. So now that this low has been taken out, what is it more likely to do? Is it more likely to continue down and potentially I have this marked up as a new weekly opening gap, which goes further all the way back here in time. But the nearest low and stops were right here, and that was taken out immediately. So once it took this low, my attention now goes to this high, because the people that had been selling from London have been trailing their stops, this entire way. So there's liquidity sitting all up right here. So that's what I'm aiming for. That's where my attention is. Now that we took this low, my attention goes up here. So that is my second trade. So if you see right here, let's go back down to the 5-minute. This is where I took one of my trades here. I took my take profit right at here. We were on the 1 minute, and I'll show you what I did for my entry. So if we play this back in about, let's see. I took my entry right around this area. Where that low was taken out, I took that entry right around here. So it would have looked something like, it came back down to my stop was right underneath those lows, because again, it already took the low. So there's no more lows to be taken out other than tapping into this new weekly open gap. But the nearest next target is going to be that high that we spoke about earlier. So once I entered here, I put my stop there, and I targeted this area here, because it could have easily tapped this zone and then reversed and came back and tagged this new weekly opening gap. But just to be on the safe side, we set take profit right there. So if we play this, you can see it play out in time and take profit. So we were already out of that trade, and we were already up for the morning. So my next thought is, well, maybe we can continue adding positions here to tag this area, right? So if we look at the 5-minute, let's go back and play it in real time and see what happened here. So we were waiting for this right here. We were already out of the market here. So we were just waiting to see what was going to happen next, whether it wanted to go ahead and break this and potentially break through, come back down, and then go higher, or did we just want to see it tank and go straight down to the NWOG? So we waited a little bit, been patient. We see a drop right here. And immediately, now that we have tagged NWOG right here, which if we go back into, we look left, notice that I have all those zones marked up. We also have more liquidity sitting here. So now that this move happened, again, my attention is up here. I'm waiting for this to get taken out. So we dug a little bit deeper, immediately creates a gap right here, from here to here. This zone right here needs to get filled. With the momentum that it took to create that candle, I was waiting for it to break some type of structure, some type of high like this or this to be broken to get retraced back, similar to something like this. I was waiting for something like that, and see if the NWOG wanted to, in a way, create some type of support where I can see it give me some type of entry. So if we play that in time, we see that happen somewhere around that zone right here. Let me see. I look at my 5-minute right there. So this is what I was looking at right here. So notice that we go in this small bullish run and we tap the very top of that NWOG, and it creates some type of sort of like a resistance in a way, and it immediately drops down. So when I go into the 1 minute time frame, I want to see something like this. I want to see something like this. I want to see a high taken out right here, for example, right there. That's perfect. So there's this high right here. It drops down. It goes up, comes back down. This was an entry right here, right there. I would have entered, or I did enter. Something like this is where I entered. And because we have already taken lows, I'm confident that this is not going to continue down because there's no more lows to be taken. So that's why I set a stop right underneath that. And my target after that entry here, coming down, breaking that structure again right here, this high also, and gave another entry right here. Came back down, pushed up. Notice it came back down and kind of filled in this gap, and this was another entry right here. With this wick coming down, you could have entered right there. And if you want to use a very tight stop loss, that's fine. I usually use the very first low created as a stop. So I would have set my stop loss there. This one, I didn't have a stop loss for the second entry that I made. And I was targeting this zone right here, all this right here, and this specific high. Why this high? Because it's right before the London high. Yes, I wanted to see this get tagged, but it doesn't always get tagged. So I set my take profit at a very specific zone, at least right underneath what my major target is, because I don't want to be, I've had trades where they go in my direction, they're right, maybe a couple of pips or a couple of points away from hitting my take profit, and it immediately reverses. And not because I was wrong, or in a sense that it wasn't going to go towards that direction. It eventually does, but sometimes it tags certain lows or certain highs, it reverses, and then it comes back up. And this is kind of what it did today. And I'll explain a little bit later once we move forward into FOMC meeting news. But that's essentially what I was targeting over the long term. So now that we have a really long drop, this is where I entered, and I wanted to take my profits. I did enter multiple times here. So what I did is I took partials here. And let's go ahead and play that in real time to see how those trades played out. And again, I was targeting the high, but I took my partials here. Why did I take partials here? Because I want to take off the bulk of my positions in a zone that I know is going to be more probable. Because you want to look at the market in probability. So it's more probable to hit here for sure. It's a higher chance that it's going to tag here versus here immediately, because I know that it may tag here right now, but it may then consolidate a little bit, come back down, play around, and I really don't want to wait that long. So I would rather take off the bulk of my positions here, move my stops to break even, and then let my runners run up here. And there we go. You see it kind of give another entry there. It creates a low, it swings up, it creates a new high here. Here, let me go ahead and extend that so you guys can take a look at it. But this is essentially what I'm talking about. It comes down, it takes these lows here, creates a new low, and then runs away, creates a new high right here, comes back down, tags this fair value gap right here, and that NWOG also is, you see how precise that is? It taps the bottom of the new weekly opening gap and then continues. So this could right here, this candle right here would have been another entry for a long right there, for a buy. see what she does. And that's where I'm wanting to take most of my position off because I'm already entering at that zone. So this was another entry. I was waiting to see if it did give me another entry here. It did come back down again because these positions are already, the stop losses are already at break even. So these are risk-free trades. After I took off more than 80% of my position here. So there's only about a 20% run still going there. So I was waiting for another position here. Because again, we already took lows. It wouldn't make sense for this to continue going down. Yes, it looks like we're in a bearish run right now, but if you take a look, we have so much liquidity sitting right up here. All this needs to be taken out. So again, remember what I said at the beginning of the video, that I target and I take a look at where people have their stop losses. So all this bear run, people have been trailing their stop losses to these highs right here as they're selling, right? So where are we in a way stop hunting? You know what I mean? Like where are we gonna take those traders out is right here. So these are where my targets are. If I'm entering low, I'm targeting these highs right here. Took another entry there. Look at that. That was news. That was FOMC. I had some positions here. I accumulated more positions here. And the reason why I felt comfortable taking some positions here is because of those rejections. Those small rejections were kind of indicators for me, especially being on that new weekly opening gap. I was taught that sometimes the new weekly opening gap either bounces and acts as some form of protected area and immediately goes away. And in this case, we can see that here. It took these lows, immediately went away. It tagged this area, and then during news, immediately went away. When I took my buys here in these areas, I did take most of my positions from these buys here out right here. Why did I take them out here? Because during a high impact news driver like today, FOMC, we don't know which direction the market wants to take. Yes, I do believe, and I am a firm believer that the market is an algorithm driven market. And with that being said, with news drivers, sometimes they're going to target those highs, they're going to target those lows. But why would you want to be in a market that you don't know exactly what's going to happen? You're lowering your probabilities of being in a profitable trade because you don't know. Nobody knows. As much as we want to be right, why would you enter that risk? Why would you take that risk? There's no reason for us to take that risk. So I ended up taking most of those positions that I had buys here. I took them out right here, right before news, which was, I think, if I'm not mistaken, at 2 or 2:30. Let me double check and make sure, because I want to make note of what time. So 2 to 2:30, and we can see that here. This is 2 o'clock right here. So it rallied a little bit higher. That's where I took out most of my positions, which the buys were right here. Buy. Took out my positions right here. And then it dropped. It stopped right here. Once it tapped that, and I saw this gap created, And this is why I have this marked up, because now that we've crossed and taken these highs, I want to see if this is going to be respected. So if you look over in time, this is the area that I could potentially be interested in. One, because we already took all this liquidity right here with this single move. And we, in a way, what most people would call a break of structure. If we look at the 15-minute, we have a break of structure with this candle eating up all this liquidity. And now we have, some people call it break of structure. Some people call it market structure shift. To me, it's the same thing. We broke that right here and we left this gap. I want to see if it's going to come back to at least consequent encroachment, which is halfway. And that's where I took my buys. Short-term buys, because I don't know where the market's going to go. I don't know what it's going to do. So we're only going to take scalps. I got in. I was in some drawdown. It came back down, bounced. Took another buy here, respecting this area right here. And that happened. I had my take profit right here because I wanted to see this high taken out. Once we dropped down, I entered here. I was confident this wanted to fly up from here, from the 50% right here. It didn't. It dropped down. I left my position open with a mental stop loss right here. That's the last major low that I see from this rally right here. So I didn't think it would cross this area right here. And if it did, I would have taken my positions out, because we're in the business of managing funds, not losing the funds. So we have to make sure that we're taking care of our capital. So you don't want to let something like this run too long. You want to know when to close. And that's why I saw this retracing coming back up. Took another entry right here, targeting this high right there. And within a couple of minutes, we were right here, and then immediately took and tapped take profit. But that was my day today. I did take multiple entries because I was in some drawdown on my funded account. I made the mistake of going back and not using a stop loss with some very risky trades that I took. But I did note that in my journal, and moving forward, we are going to take that a little bit more serious with the stop losses. I do take a lot of my trades more of a scalper method than actual long-term trades. So with that being said, I do have very tight stop losses. So if you look at my track record, I can post that too. A lot of my stop losses are very small, are very tight. So the way I see my trading plan is that has been working is very small losses, but my winners are anywhere between 2 to 3 RR. And that's why I've been able to get funded. That's how I've been able to make my first funded withdrawal. And I'm looking to see if I can make my second funded withdrawal here within the next couple of weeks. But if you guys enjoyed this video, please like the video. I just want to make sure that I'm being transparent enough to show you guys that it can be done if you just manage your risk and think of it as just that. You are just protecting your capital and you're trying to multiply your capital. So at the end of the day, you got to take your risk management very seriously. Lesson learned in my end, I was down about 8% and I was able to recover from that within 2 to 3 days with, just scalping ICT's method. Um, Again, guys, if you have any questions or anything like that, feel free to DM me, send me a message, like the video, comment on my video. If you want me to make more like these, keep me posted, and I'll be more than happy to post more. Thank you, guys. Have a great day.